Every country has decided to follow in the footsteps of the Fed and their actions. They set the precedent to print money to save the nation from collapse, and everyone joined the conga line in this wild party. There are trillions which have been printed, and so we need to understand exactly where this fiat money has gone. You came here for the truth, so let me unveil that for you. Today we're going to look at stocks and bonds, we're going to look at different cycles, real estate, and so much more. Let's begin. This is Japan. That's right, you guessed it. Total Japan ETF holdings and the Bank of Japan ETF holdings, and you can see what has happened over the years. Percentage of ETF assets owned by the Bank of Japan is now at 75%. 3/4 of this ETF market is owned by the central bank. And we are not even talking about state-sponsored entities and everything else that's really government-owned institution or government-backed institutions. This is just the Bank of Japan itself. Print up money, buy up shares. That's what's going on. People somehow think that this is okay and that this is a good reason to continue to purchase equities. Because as long as the central banks are buying equities, I might as well join the party. Get in the conga line. To me, on one hand, I could understand that. Ride the wave. Totally fine. To me, it sounds very risky because they can ultimately decide, just as they've been printing the money, they could decide to pull that back at any moment. Now, I don't think any investors are in Japan anymore. I think that's all gone. I think all the real money has fled. And I do believe that this is happening with other markets. If we see this in other markets to the same degree, you're going to have a very big problem. Because Japan has been nothing but a corpse for a very long period of time. Look at how their stock market is essentially non-existent, and that's factoring in the asset purchases that have taken place. If you were to exclude that, it's disastrous. And they started this decades ago, and it's still going on today. Japan is not the model for success, as I've continued to argue with people in the financial industry for quite some time. They believe that printing money can be successful because of Japan. That's a known fact in the financial industry. They're always used as that example. Of course, that isn't true, and it is quite the opposite. There's no real money there anymore. So is that somehow successful? I don't think so. Okay, Bitcoin has surpassed, in terms of its market cap here, Goldman Sachs, Microsoft, and PayPal. We're looking at this going to new heights. It is incredible to see where it has gone in a short period of time. I know there's a lot of people who say it's a bubble, other people who say it is the Messiah. I'll leave any opinion that I have of it out of there. I'm just pointing out the fact that there is a lot of money behind it now, and that is growing. That's all. Let's move on here. And by the way, it's said that this has risen to this level of 6,300 right now because of what's happening in Spain. So the issues that we've seen in Spain right here, that's what really had pushed it up to this degree. It had come down ever since, as of this recording, but it did break that barrier through the 6,000, went on towards the 6,300 mark, came down a couple hundred there. But that's the way this works with any cryptocurrency. It is extremely volatile, and that is one of the concerns that a lot of people have, because it's hard to consider it an asset or some sort of store of value when the percentage base can fluctuate on a given day of 20%. It's something that is extreme, that we'll see. So let's see. Looking at this next article, the Kondratieff Wave. I learned about this from two books, from Mark Faber's Tomorrow's Gold And I learned about this also from another great book, which was talking about the Elliott wave theory, long wave, and that is Robert E. Prechter Jr., if I remember his name correctly, At the Crest of the Tidal Wave. It's a great book. You know, it was written, I believe, in the 60s, but it still holds true today. And they talk about the Kondratieff wave. So there are different cycles that happen approximately, let's say, every 7 years or so. And you look at the different cycles within different commodity cycles that happen to be longer, and you look at stock market cycles, and there are bond market cycles and everything else. There's all different cycles. Some of these are very, very long. So you can see that over the period of, let's say, 200 years, or you can see that over a period of 50 to 75 years. And that's the Kondratieff wave. You know, it's over a span of several decades. And according to this particular indicator, we are headed towards what they call winter time. And that is a downward trend. There are upswings within that downward trend, but ultimately heading downward. So remember that there could be spikes of, let's say, 10% up or 20% up or 50% up, but overall being in a downward trend. That's what the Kondratieff wave tells us right now. We could make history and change that around, but anyway, that's one indicator. Manhattan office sales volume. This is specifically with the number of closed transactions. It has declined significantly since 2013, excuse me. And even if you extract this one particular quarter, which was very well, you still get that same picture, that over the past few years, this has declined. What we're looking at is deals over 5,050,000 square feet. So the big deals, they're not closing as much anymore. And that connects in with this Manhattan office sales volume. Same deal here, but in billions of dollars. Again, we're getting that picture declining. And look at this, in Q3 of 2017, it's at the lowest level it has been in years. So what's happening in Manhattan? I mean, the prices are still extremely high. Don't get me wrong. But things aren't moving as fast. The American home. Bigger houses, smaller yards. And what you're looking at here with this reddish orange line here, percentage of property used by the home. And this is an increasing value here. And property size in square footage. And this has clearly been on a downtrend. What I would say is it's all dependent on what you value as a person. There are also geographical issues as well. For example, if you live in a much northern climate, you would probably want a bigger house instead of having an outdoor living space, which is probably not very useful for some areas. So you would want a bigger home. And that's reasonable. But ultimately, what we can see is that the houses get bigger, the yards are getting smaller. For myself, I value a bigger space. That would be great. That's something that I definitely dream of. To have greenhouses so I can grow food all year round. To be able to just have some sort of peace and tranquility. To have my own space. And just, even for the pollution factors and everything else, it would be something that I think that people don't necessarily value as much today, but I wish they would. It's something I think is really important. And then there's this. This is a different little take on things. Why some cities are buying trailer parks. So it tells the story of this one particular lady, but essentially what is happening is these trailer parks, they may have hundreds of people in them, and while they may pay for their trailer, they don't own the land. They don't have rights to the land. So these trailer parks will sell the land to a builder, And that builder will basically say, okay, we're going to redevelop this land. So everybody's kicked off. They got to go and find other places. Obviously, that's bad for these people. What some of the cities are doing is that they have trouble finding affordable housing for the individuals. And so they're buying the trailer parks and then trying to get them to sort of get into some sort of cooperative where they own a share of it and everything else. So this is what they're attempting to do. And it just shows you what's happening, that the incomes are definitely not keeping up with the housing in those particular areas. And I've shown you the charts before. You can look at an area like San Francisco or even Manhattan, as I talked about, and you'll see very, very high prices, average prices. I mean, you can go into the dangerous parts of the cities. There always are. But it's looking at it as a whole where you're trying to find a place to live, and it becomes more and more difficult. A lot of people simply can't afford it. So they're living in trailer parks, but they're being pushed out. And that's one of the things that's happening right now. Affordable housing is becoming more difficult to find. Now, we shouldn't have that problem if our wages were keeping up with it, but we know that's not the case. It's not happening. Something is going way out of whack, and instead of all that QE making its way into people's pockets, it's really finding its way into these particular assets. Look at the Japanese ETFs. I mean, that's where the quantitative easing is going. It's not going into individuals' pockets. It's not going into something that actually benefits people. So, if you found this video informative, please give me a thumbs up. Last but not least, if you found the video informative, I know you will find my books, The Money GPS, and my new release, Global Economic Collapse, even more informative. You can actually flip through these books. If you go over to Amazon, they have links there for you to check out. You can see the look inside feature. It will allow you to flip through the pages of these books to see if you like them. Take care.